Today's discussion is about men's fashion, which at sometimes can sound like oxymoron because are men's actually fashionable?
Men's fashion has been very unsexy for a while. Why do you think that's so?
I would say two reasons. One is more cultural stereotyping, as in when I was in college, people would dress in different ways. As soon as you enter a working situation, then you are expected to dress sober, right? Second, when your belief is that the consumer doesn't want to change, that as a brand, then you start producing those kind of products. See, as a category, it's a very attractive category in terms of size. If you think of it, maybe apparel would be about $60 billion market, of which 40% is men. So, what is changing? Like, what are the tailwinds in your mind as a consumer, as an investor?
People in my generation, need a separate type of clothing for very different occasions. It's literally almost a sin to wear the same shirt that I wear for like a Goa beach vacation to a vacation in the hills. So overall, I've seen different types of occasions needing different wardrobes.
If we were to predict future, 2030, what different categories can emerge in men's fashion? What would you be excited about?
So at least I believe in 2030.
Hi everyone, welcome to 2030 Consumer. At Stellaris, it's our job as investors to predict how consumer trends will change in India, what will Indian consumers do 5 years from now. And this podcast is an attempt to, have a discussion, talk about what we are seeing, why we are finding something interesting, be it in an area of shopping, eating, parenting, dating, though not for me, but for our guest Shreyan, surely. And today's discussion is about men's fashion, which at sometimes can sound like oxymoron because are men's actually fashionable? And no better person to have this discussion than with the youngest member of our team, Shreyan, who's like a sought after bachelor. And we'll talk about fashion today.
I hope so. But no, it's funny that this question is coming from you, Rahul, because you're the reason, your generation's the reason why men not being fashionable is notorious, But fair enough, Rahul, like, this as a retail category, men's fashion has been very unsexy for a while. Why do you think that's so?
Well, I would say two reasons. One is more cultural stereotyping, as in, when you're in college or when I was in college, people would dress in different ways. As soon as you enter workwear or working situation, then you are expected to dress sober, right? So that mindset has stayed for the longest period of time, which is basically then saying that I don't want to experiment too much as a man. Second, which is a fallout of that, is brands also didn't want to experiment too much, especially with offline brand. The challenge is that it's a 2-year design cycle. So you're trying to predict what will sell 1 year, 2 years down the line. And when your belief is that the consumer doesn't want to change, that as a brand, then you start producing those kind of products.
Interesting.
So it's a chicken and egg situation. Clearly, I am assumption it is changing. See, the category, it's a very attractive category in terms of size. If you think of it, maybe apparel would be about $60 billion market, of which 40% is men. So it's a very attractive, large market.
Got it.
But yeah, those are the reasons I would say it has not been as fast, as attractive till now.
Yeah, interesting. And what's the sense of the market today? Who are the large brands? Why have they been winning?
Yeah, so part of that is large brands are mostly older brands. So you think of, Aditya Birla Retail, they have multiple brands like Van Heusen and, Louis Philippe and all. Then in between, there were newer brands like Peter England Launch, which was lower price point. Then you have category-wise brands. So Raymond stood for suitings, Levi's stand for jeans. Then you have bottom wear only brands like Blackberry and all that used to exist. But all of them have been traditional players, more offline driven, with the belief that, whites and blues are what gets sold, and so let's make more of those.
Got it.
So yeah.
Got it. And how have these brands performed? Have these been large brands if we compare it to, let's say, the women's wear category?
There's an interesting part that while women wear category has seen more action, in fact, if you think of size, these are the men's wear brand, even these older brands have been larger and also more profitable. My understanding is that their EBITDA is closer to, late double digits, like 15 to 18%. Whereas most of the women wear brand will be in the 10 to 12%. There's a reason to that, isn't, what works, if you sell, you have to sell less complex SKUs. And in general, men have been more sticky to these categories.
Very interesting. And any new age brands that are disrupting this market?
Well, you should know better because you are the ripe audience for that. Based on whatever we have seen, together, Snitch has done well. You have other brands like Be Young, Rare Rabbit. These are some of the newer brands that have come around in maybe the last 5 years or so. So yeah, these are some of the or even like Bonkers Corner, right, or Soul Store. These are again brands. Not all of them are men's only. They are, but they stand for something different than what used to be, the earlier boring brands for men.
Yeah.
So Shreyan, enough of you asking me a question. Let me, reverse this. You would know the best. What is changing? Like, what are the tailwinds in your mind as a consumer, as an investor, especially in this category?
So one very clear thing is that people in my generation, need a separate type of clothing or a separate wardrobe for very different occasions. It's literally almost a sin to wear the same shirt that I wear to a small party, to a large party, that I wear for like a Goa beach vacation, to a vacation in the hills. So overall, I've seen, different types of occasions needing different wardrobes.
And like, why?
So at least one very clear theme is because of this visual economy. Everything that I do is posted on some sort of social media now. And personally, if I post with the same shirt on two Instagram posts, I know I'm losing followers. So I'm definitely not doing that. So every Zoom meeting, every team offsite, etc., sort of needs a different wardrobe because of different visuals that come along with it. The second, I think, is that the stigma around men being fashionable has come down significantly. It's actually cool to be fashionable as a man now. So, I wear it almost as a badge of honor. And how this is all changing is it's always that one crazy person in the group who will, experiment something wildly and actually pull it off. And then you always feel like, I can also do this. So you end up experimenting more with your wardrobe.
Interesting. Yeah. So what you're saying is that maybe what was a wardrobe of 10 is now a wardrobe of 20, 30 shirts. And people even in a day might wear multiple outfits. Something in the morning to gym and then something in the work. Maybe Friday work wear is different, or evening to a going out with a friend versus a party. Very interesting.
Absolutely. And any other themes or changes you've noticed, Rahul?
Yeah, when I see, one other thing is that, like my kids, they don't like to associate, even if let's say Van Heusen and Louis Philippe was to do a new design which really looks cool, they don't want to be associated with that brand. So there is a clear shift of, and clearly the market has also grown. So there is a clear shift of segments, customer segments emerging and brands being built for that segment. So maybe there is a brand that I associate with. There is a brand with maybe what you associate with. Even if selection might be similar, we have a different association for other reasons. And you want to buy from that brand. So that is the other thing I've clearly seen at least in younger age group.
No, absolutely. I think different generations associate to different store vibes, styles, etc. In fact, apart from these two trends, I've also noticed an overarching trend, which is that casualization of your core spends has also begun to happen, right? Like, I'm surprised that nobody says anything to me when I wear a crocheted shirt like this, right? But I think in a few years before this was not too acceptable. Any indication on maybe why that's happening?
See, part of that is clearly this whole COVID pre and post. Clearly what happened during COVID was also that we were all online. So nobody was, dressing formally. And then once we came back, it kind of became a norm. Right? So what used to be Friday dressing 20 years back is everyday office dressing today, I would say. So that is a very clear change that I'm seeing.
Interesting. I'm just glad that I've spent a majority of my life working post-pandemic. I don't know what a nightmare it would have been like before that.
So. No, very true, very true. And see, what you are calling nightmare was what was normal for me 20 years back. But yeah, coming back, finally, what I understand you say is also these extreme examples have become a norm, right? So those trendsetters in the group, they are considered cool and then people try to follow them. And that's what I believe, as in my understanding, is why people are becoming more and more fashion conscious even in the men's category.
Got it. And this particular theme is also interesting because this is affecting your very core everyday spend. So it doesn't mean that brands are built around new occasions, which we were discussing. It also means that your existing core occasions need fresher collections and new brands can emerge.
True. So Shreyan, we have clearly established the need and what is changing. Let's get to the meat of the discussion as to if we were to predict future, 2030, what different categories can emerge in men's fashion. I'm sure we'll still not be able to predict everything. What would you be excited about?
So as we were discussing, this is maybe the perfect time to start building in men's fashion because there's more space than ever before. It's not just that yearly spends are rising and that, the number of items you purchase per year is increasing. But it's also that you can build across so many different segments. You have an age segment, which we discussed. There's an income segment. There's an occasion segment. So at least I believe in 2030, people will buy a lot more and you'll have brands across these categories and the depth of men's fashion will slowly creep as closer to women's fashion. Maybe.
Do you mind sharing some of the opportunities? I'll also share my views, but would love to start with you.
Yeah, I'll start with my personal favorite. So this is, these mid-premium, sort of smart, casual, everyday workwear. And I think as we were discussing earlier, in my head, this is the biggest opportunity because now what's going from basic blacks, whites and greys is expanding to, let's say, a purple Chinese collar with sneakers and maybe linen pants that people wear for everyday work. So we've seen brands emerge in this category already. You have a Rare Rabbit, you have Uniqlo, that are already playing in this category. But for this 25 to 35-year-old first jobber, I think we'll see a lot more D2C brands coming up. The key here is going to be, speed to trend identification. It's definitely faster than it has been in the past. So maybe things from the runway will come to you in, let's say, a few months, or trends that you're seeing on Instagram will come to your shelf faster. And what's allowed for that is obviously the supply chains in fashion getting overall better. Having said all of these things, it's still going to be much easier than for women's fashion, which is why I think so many different brands will emerge. What about you? What's your...
So one area that we are interested or I'm interested in is this whole entry-level multi-purpose brand. So think of businesses like Zudio, where the objective is that a customer which was buying from unbranded market, which is very large, now wants a branded experience.
Yep.
Now, what does that mean? That means obviously fast to fashion, fast to trend. It also means pricing. You want a retail, like a slightly upmarket buying experience. But that is one area that I am quite excited about. In fact, we have made this investment in a company called Outsider, which is serving that, but more online first as a category. So that looks interesting. Similarly, ethnic wear, we have Fab India, but you won't associate with it. But company like Manyavar, right? They established the whole wedding wear market, quite large, very profitable. A business like that, but now built for a younger age audience, not for the bride and the groom, but for people who are going to maybe to the wedding, or even people who are going for festival occasions. So there the consumer is not looking for heavy stuff. They look for maybe mirrored kurtas, but in funky colors, right?
True.
So that's another space that looks very interesting to build a brand in.
And a few geeky facts, because even I'm very interested in this subcategory. So ASPs or average selling prices in this category end up being much higher, right? You'll have sherwanis which are maybe tens of thousands of rupees. But even a kurta is maybe 2,000-3,000 rupees, right? Which is much more expensive than your casual shirt. What that leads to is, a significantly higher gross margin. So, maybe you're operating in the 70s as a % of gross margin, which allows you to be more profitable. So, Manyavar or Vedant Fashion, you won't believe it. It's obviously doing hundreds of millions of dollars of revenue, but its PAT, not even EBITDA, is about 25 to 30% every year. So, interesting category. Any others?
So, see, I would say also gymwear, or think of Lululemon for men. So, more led by technical fabric, but, it starts with gymwear as a value proposition. Obviously, they also expand further. Sometimes they become your casual wear clothing that you wear outside as well. I don't know if you know, but like Lululemon has this men's collection, which is the ABC pant. quite famous. It is still very expensive, but thinking of similar innovation on the fabric side and then bringing it for the Indian audience, that could be another interesting. Till now, like most of that segment is served by more global or brand like a Nike or Adidas or maybe somebody buying Lululemon from outside. So that's another piece. I think in US alone, this would be like 50% of the athleisure market is these kind of brands only. So that's interesting. The other thing I find interesting is in any category which has moved from, let's say, more automated situation. So what used to be tailored category is now becoming, more pre-stitched garments in some sense, right? What you see is there's another segment that emerges, is the high-end bespoke category, which is these people who want customized or tailored clothing for themselves. They are willing to pay very high price. So Bombay Shirt Company is an example of that, but maybe that category may not be small today, but I think 5 years from now, as the age group of 40 plus rise, incomes rise, people will want that experience also. That it is for my, it is a collar which is I decided, clothes which I decided, the fitting is perfectly for me only. So those are the other pieces that I think could become large over time. You've seen that in watches as an example, right? So something similar can happen here as well.
Got it. And lastly, I think there's also this niche category of people even younger than me, you won't believe it, Rahul. But these, 15-year-olds who are experimenting with loose clothes, almost what you call streetwear, right? So, these will be graphic t-shirts fitting loosely on you. And a few brands have come up, these are relatively small and niche, like Almost Gods. But who knows, whether this becomes the new normal. So this is also an area to maybe look at.
We talked about a lot of interesting trends. Now, clearly as an investor, the question is that is this overall an investable business or not? Especially in the context that most of the businesses we look at are more online first, while they become omni-channel over a period of time. But that becomes a one big question. So, in that context, what makes this category attractive?
So, Rahul, at least 3 large reasons for me. First is that repeat buying in this category is actually much higher than for women's fashion and is high overall, right? It's because men overall are creatures of habit. What we'll do is we're lazy human beings. We'll like, one shirt and one fit from a particular brand. Then we'll keep repeating that brand for different colors and maybe different styles, right? So a few interesting facts, a lot of these new age brands are seeing 120% revenue retention cumulatively by the end of the year. So what that means is if I'm spending 100 rupees on my first order, I'll end up spending another 120 rupees with the same brand over the course of the year, which is interesting, right? The second good thing about this category is that relative to women's, where the biggest risk is a fashion risk, that you might be carrying too much inventory, which either means that your working capital is too high or that you have to sell clothes at dirt cheap, which affects your gross margin. That is relatively lower, and that's because trends change relatively slower for men versus for women. So you don't need to carry that much inventory and don't have to do that much science. The third, of course, is these broader themes that we've been discussing, because of which the why now for this category is very, very clear. So, these are the 3 reasons I like.
And any further numbers lens on what are the key metrics to look at?
So for founders to watch out for, I think 2 key metrics that might make or break this business online. The first is sell-through. So what sell-through would mean is how much of your inventory you're being able to sell at full price over a period of time. So for Zudio, this number is best in class, right? It's 80-85% or more. So as a brand, if you're able to even get to 70%, that's a good number, but it is the most important number to track because it shows or indicates product market fit. The second is that, like in any consumer brand, your LTV CAC situation needs to make sense. In the case of men's fashion, there are a lot of things in play. So depending on your AOV, your CAC can vary also, right? So for instance, Snitch is operating at a 700 to 800 rupee CAC. Okay. Given its AOVs are maybe 1500 rupees, 1000 to 1500 rupees and high repeats, these make sense for it. Similarly, as a brand like Rare Rabbit, maybe given your AOVs are much higher, which is above 2000 rupees, you might be able to afford a higher CAC. But broadly, what I'm trying to say is that CACs need to be in control, and that the economics of all of this need to make sense, because all of this indicates how deep the value proposition is and whether you can make a long-term economically feasible business.
One other thing I look for is like, CAC recovery period. Like I have seen that if you can recover CAC in the first year, that's a very good sign of product market fit. And I think to the point you mentioned about revenue retention, the other advantage of having that number is it tells that brand is sticky. As in consumer is liking what you're producing. So selling once is okay, but are they coming back? That's a true reflection of how how attractive the brand is. But yeah, so I think what you are saying is that things that fit the narrative are able, and if it fits the narrative, it is possible to make the business work. As far as the unit economics are concerned. Right?
Absolutely. So this section of the podcast is going to be most useful for any founder who's building in this category, because I'm going to pick Rahul's brains on all the interesting choices that you might have to make, and maybe what's a good choice versus what's a bad choice. So let's start with, the most basic question on ASPs. What ASPs should one be playing at?
So there is no right answer, and the good part is there are opportunities in all price point segments, if I think of it, right? You have people like Zudio, which I said starts at the entry level price point. They operate at this concept of everyday low price. So there is no discounting. They have very tight gross margin, maybe in the range of 40% or so. But then they make the business work there. Then you go next level, you have people like Westside at higher margin. On the other side, there are people like Rare Rabbit who have built a business with a much higher price point. So I think you can see that if you look at fashion brands, there are very few in each one of these price point segments. So you can build across these categories. What matters is, see clearly when the ASPs go up, if you're scaling the business fast, your CAC will also be higher, especially if you're trying to acquire them online. So that is the equation you need to be careful with, that the lower gross margin businesses and entry price point segments, you can't be spending too much on marketing. The product needs to speak for itself. The consumer will buy for whatever it's worth. And then the repeats take care of it. In a more expensive category, it is harder. In general, more premium the category, longer it takes for the brand to evolve. So as you go beyond Rare Rabbit, luxury or the super premium category, it's just that brand takes decades to build in those segments.
Interesting. And what about this choice about going online versus offline?
See, clearly, online allows you to get started faster. Online allows you a presence which is across the country. Online also allows you to visually tell consumers on what you stand for or how good you are. And then there are challenges with online, which is you can't touch and feel. You don't know whether it look good on you or not. But I would say any founder who wants to thinking more efficient capital should start online first. You get to know very quickly whether the product is working or not. Versus, let's say, opening one store with the same capital or two stores. In that local catchment whether the product is working. But beyond that, you don't know whether you should scale fast, slow, change anything in the design and all.
True.
So online has that advantage. Over time, I do feel omni-channel becomes important. So you do need physical presence. It gives credibility to the brand. It allows customer to touch and feel, maybe experience the fit and design, and then buy online also. The good part about men's fashion specifically is that even today, like I would say, it is one of the largest online categories, like closer to just under 40%. Because again, fit and all is not that big a deal. As in, if you know that 38 size a particular brand fits you, then all 38 sizes shirts will fit you, kind of a situation, right? The other dark horse is quick commerce. So you can have stores, but if your quick commerce channel works, it acts almost like a store. So in that case, you create me few flagship stores in a city, maybe two stores, 5 stores. But maybe the better option is to service the same customer using quick commerce as a channel.
Yeah. And a lot of these quick commerce companies are also doing try and buy, which maybe can solve for both of these challenges. So super interesting. And actually, since we're on this topic, so many founders ask us, is it better to go D2C? Is it better to be a marketplace brand? So what are your views on that?
Yeah, see, I would say you need D2C present for multiple reasons. One is that's your best channel to get feedback from the customer. See, because when somebody lands on your D2C site, there is no option other than your product to buy. When somebody lands on Myntra or Nykaa or Ajio, there are 50 other brands to select. Your conversion depends on whether you are up in the ranking or lower in the ranking. So you don't know what why is consumer buying from you? So not having D2C is a sin in my mind, in the sense that you don't know whether the PMF is there or not.
Very interesting.
Clearly, D2C initially is more expensive because you are now a new brand. You are telling, buy not from Myntra, who offers no question asked returns and a lot of consumer friendly and a lot of selection, but buy from me, right? So it creates higher CAC.
Yeah.
But hopefully, if the product selection and brand is done well, then consumer will come back and buy from you. At the same time, not being on marketplace also does not make sense. You have to obviously sequences which marketplace to go first, because that is where a larger audience is. So it is like saying you open a furniture shop, but you are not in the furniture market of the city. Right? So you have to be there.
True. Interesting. And actually, we've so casually discussed that there are so many places that you can build a brand in, etc. But the cold start problem always confuses founders, right? So putting maybe a founder's hat on, what are some interesting wedges through which you can even build a brand?
Yeah, in men's fashion, I would say, see, there are the product itself. You can either differentiate on fabric, on prints, or on silhouettes. Today, I would say fabric is an easier place to start with. Print becomes harder. So fabric of certain differentiated kind would be a good hook, and we have seen multiple brands, and then they pick one kind of stuff. So like there is a brand who will only do flannel shirts to start with, somebody only doing streetwear to start with. Those are all good wedges, because those are generally considered small wedges. So people build a presence, and then they broaden. But I've generally seen like silhouettes. I don't know how much difference can you create, especially in the Western wear men's market.
Yeah. No, actually 2-3 examples come to mind. I remember somebody telling me that even Snitch had started off with maybe just crocheted shirts to start with. An upcoming brand like Bear House, their core was flannel shirts. So people have done this. I think Sold Store was graphic t-shirts, right? So interesting ways that you can do that. And while as investors, we are born optimists, and all of the positives we've discussed in depth. But what are some risks in a men's fashion business?
So, see, clearly first is you have to get the product right. So that, leaving that aside, I would say that is true with every fashion business. First biggest risk is inventory. That you get saddled with stuff that is not selling through. And that's when the downward spiral starts. You start discounting, you start not having enough money for the next season, and so on. The other one is that you have to, while you start with some design, some fabric and all, but that can't be the only player. It becomes very hard at that point of time to differentiate with other similar players, because people also copy. So at a point of time, you need to build some aspiration into the brand. And good part about men's fashion is men are sticky. So as I said, if you can build that aspiration, people will come again and again to shop from you. But those are the two things, first is more numbers driven, second is more creativity driven as to what is the aspiration behind the brand.
Yeah, interesting. And while all of this optimism aside, no brand is easy to build, and in fashion also, there are some risks that we do need to be aware of. Like we were discussing, your inventory might kill you if you hold it for too long, both on working capital or on profitability. If you're not changing quickly with the styles, then you might be a brand that lasts for 5 to 6 years, but not a brand that lasts for an eternity, which is what we want, right?
Actually, I have then the question. Your thought is very interesting. How many brands do you think has stood this test of time of going beyond the first 5-6 years of success?
Yeah, and actually these stats are also very interesting. Slightly pessimistic today, but you'd be surprised to know that while this is north of a $60 billion market, apparel overall, men's and women combined, I can't think of any brand that has more than 5% market share. It's been an exceptionally tough category to crack, which is why a lot of late stage investors also and investors in general have in fact pumped more money into BPC than in fashion, even though BPC is a relatively smaller category. Having said all of these things, there are certain exceptions. Like Zudio has just managed to kill it, right? Like they're at north of $1 billion of revenue. They've, hardly been around the block for a few years, and they don't seem to be going away anytime soon. There has been steady growth in certain incumbent brands also. I won't say it's astronomical. So again, slightly maybe pessimistic stat only, but even the Zara's, H&M's, Uniqlo's of the world in India haven't been able to cross between, let's say, 1,000 to 3,000 crores. Some of them also end up getting stuck in this category, but maybe.
And I would say in the new age brand, maybe Snitch is the other one, which has scaled in a very fast-paced manner. Part of this also could be maybe as economy we are still low consumption per capita. And despite we said men's is not as fashion conscious or design conscious, but even there people have different choices. So
absolutely,
it has been a very fragmented market till now. But hopefully that will change as well, right?
Yeah. Hopefully maybe a few factors can contribute to that change. So one is obviously as our number of spends per person per capita rise, that might mitigate this. The second thing is that right now your wallet share is getting split between so many unorganized versus organized players also. So maybe as and when organized players and brand affinity starts kicking in, you can have more consolidation and larger market share. But all in all, I think my submission will be, if you're a dynamic brand, right? It's a large category. It's a heavy tailwind category. If you're changing with the times, there's no reason why a large brand can't be built in men's fashion.
Sure. So to wrap things up, Shreyan, first of all, thanks for joining me on the podcast. Hopefully, it's the men's fashion as a category is no longer an oxymoron. And clearly there are a lot of reasons why there is a potential to build multiple large brands in this category. We talked about some of them. And hopefully when we revisit in this 2030, maybe we would have improved our drip game, right? That's what it is called, or why is it called that?
Let's not go there, Rahul. I don't think we should. But thank you so much for having me on this podcast. Excited to see how many of our predictions come true in 2030 when we revisit this podcast.
See you. Bye.